Hello guys, Altcoin Connoisseur here with another one. Welcome back. I hope you guys had an excellent long weekend and a fantastic Father's Day. I hope your wives were nice to you, your kids were nice to you, if you have those, and I hope you were nice to your dads as well. So without further ado, let's get into it. So what I'm looking at right here is Bitcoin's history. This is in log scaling, and what I've done here is I've taken some cycle notes. So I've marked lows and highs, the amount of time that it's taken to reach the high from the low, the percentage that we went up, how long it took in terms of days, as well as the time it took from the high to the low and the percentage drawdown that we experienced with each cycle. Now, I was a big believer in Bitcoin going more so based off of liquidity and business cycles rather than some sort of arbitrary 4 years. So for instance, we have so many factors that are playing in crypto's favor. We have the ISM going up, synonymous with crypto doing well. We have the copper to gold ratio peaking out, again, synonymous with crypto doing well. We have continued money printing, right? But despite all of this, to this point in our current cycle, it seems to be the case that Bitcoin is following in line with some of the key components of past cycles. So in our first cycle here from January 2015 to the high of 2017, we went up for around 165 days or 35 candles. This is on the monthly, and up 11,062%. Then from the December high of 2017 to the low, which was also set in December of, that should be 2018. That's okay. 2018, we went down 84% in 365 days. From the December 2018 low to the November 2021 high, we went up 2,035%, over again 1,000. This time it says 66 days. But again, over 35 monthly candles. From the November 21 high to the November 2022 low, once again, 365 days, down 77%. From our November 2022 low to our October 25 high, we went up 713%, once again in 35 candles, or 1,065 days. From October high to our current low, it's only 243 days, and we're down 53%. So, like I was alluding to earlier, even though it doesn't necessarily make sense for Bitcoin to arbitrarily just move in these 4-year cycles, at least for now, it kind of seems to be the case that it is, and we do have to respect it. So, if that were to be the case in our current cycle, we currently have 125 days left roughly, and that would give Bitcoin a bottoming time around October. Does this have to necessarily play out? Absolutely not. I'm going to point to some reasons why I believe that is the case, and why some people who are calling for much lower price targets might be a little bit off base. And I also want to point to the fact that it doesn't have to be the case, because even though for the past few cycles we have had this 1,065 days up, 365 days down type of scenario going on, that's not the case in all prior cycles. So for example, from the 2011 cycle, November 2011 to its peak in November of 2013, we only went up for 731 days, and then we proceeded to only go down over 426 days. So at that bear market was actually a little bit longer. So it doesn't necessarily have to be 4 years. And I think at this point we could kind of have a scenario where we have a self-fulfilling prophecy, where people just believe that's going to be 4 years, and so therefore that's the case. Let's talk about some things why this could be different. So a lot of people are either thinking, A, we're going to have a time-based capitulation where Bitcoin may go range-bound and be flat for a little while, which I could kind of get down with based on some of our on-chain metrics, or B, Bitcoin is going to go a lot lower, which I disagree with. So let's talk about why I believe this is the case. So in terms of Bitcoin being near bottom, we have a couple of things here. We have the power law. So the power law, it has basically been holding this red line of support since its inception. we haven't hit resistance every time, and in fact, we are far away from it in 2021 and barely even reached fair value in 2025. But this red line has stayed consistent throughout. So if we're looking for significantly lower targets, I've heard things around 40K. I've even heard numbers in the 30s and even the 20s. You're dipping below this chart, and you are, is disrespecting the right word? Yeah, I guess it is. Disrespecting a trend line that has existed since 2011. And the trend is your friend until the end. And I feel as if it would be an extraordinary case for Bitcoin to durably break below it. I believe back here, if we were to zoom in, it actually wicked. But nonetheless, if we were to durably break below this, this would be an extraordinary event for Bitcoin. What else? Total supply and profit near bear market bottoms. And again, it kind of goes up and to the right like a parabola. But if we were to continue this curve trend line, we're at a point where supply and profit is near bear market lows seen in the FTX collapse and in other very steep bear market lows for Bitcoin. Let's take a look at supply and loss. Once again, we're hitting metrics of 10.5 million Bitcoin in loss at this point. So to assume that we were to go significantly lower would put the supply and loss simply off of this chart. Let's keep going here. Bitcoin's realized price. So if you were to make an argument, an on-chain argument that Bitcoin could head a little bit lower, it would be this. So Bitcoin has checked in and even dipped below the realized price during almost every bear market. We did it back here in, what year are we? 2019. We did it once again in COVID. We did it here in 2022, 2023, and we have yet to do it. I do want to bring your attention to something that I find very fascinating, though. So in this 2019 run-up and the subsequent bear market, our low, if we don't count the COVID event, which was a black swan, actually never touched the realized price. So if we were to, let's say, not have COVID, for example, you'd probably get a situation in which this A euphoric top, which appeared in 2019, again, once again, without an altcoin season, never hits it and probably would have gone up from here and never even checked in with it. We have, again, an A euphoric top, and we have a possibility of not checking in with it, especially because we have a lot of other metrics, supply and loss, supply and profit, telling us that we might have already hit our bottom. That's it for right there. Additionally, too, Bitcoin is, I have it over here. It's kind of difficult to see with my notes. But Bitcoin is basically sitting at its 200-week moving average, which it has either checked in with or briefly dipped below in each bear phase. So people say, oh, it can definitely go below the 200-week SMA, which it can, but it really only did this during this 2022-2023 bear market. And in other bear markets, if we're going to make the comparison between now and 2019, once again, a euphoric top, and we simply get a wick below the 200, come back, and then start shooting up. And that's kind of what we've seen here already. That second capitulative wick that we've had in June briefly dipped below the 200-week SMA and then shot back right back up above it. So we could very much be in a similar spot as we were in 2019 right now. So another thing that I want to bring up here is that when people are calling for a lot lower prices in Bitcoin, the problem I have with that, besides all this information, is the fact that we also have diminishing returns. So if we look at each cycle, right, 11,000% return, 2,000% return, 713% return. So which is it going to be? Is it going to be deeper bear market to 40K, 30K, Bitcoin in the 20s? Or are we going to have diminishing returns? Because we can't have both. If we had both, you would essentially say that, oh, hey, crypto is, let's draw on this, why not? You'd essentially say that crypto and Bitcoin is over. You would have lower bear market, diminishing return, lower bear market, diminishing return, lower bear market, diminishing return, and we would just go like that. And eventually crypto would be done, which there's really no good evidence at this point to state that. So what I did was I took these values from our cycle low to cycle high that reflect our returns, and I had a conversation with a robot, which is something that I find fun to do nowadays. So I asked Grok, I'm going to give you a series of numbers and percentages that correspond with Bitcoin returns from each cycle low to each cycle high historically. These numbers are diminishing over time. I would like you to give your best mathematical estimate of which number is likely to occur next based off of the existing pattern and explain your rationale. Here are the numbers. The 63,000, this was a 2011 cycle, by the way. So 63,479, 11,566, 2,107, 713. So Grok comes up with around 130% or 2.3 from the 2.3 times the cycle low. So I'm not going to pretend that I'm a super intelligent math whiz and I understand what Grok's saying here, but basically it ran a model known as a linear regression on natural log, and utilizing an exponential decay fit, and determined that cycle 5 would be around 130%. And with this prediction value, it was fairly close to being accurate each time, sometimes a little bit below, sometimes a little bit above. The robot is frequently wrong, so there's no guarantee that we're going to hit this 130%. And it says it's not an ideal fit for everything, but it's something to consider. So if we were to drop down to these 30K, 40K levels and only get a 2.5 times return from there, Bitcoin's just going to make lower highs and lower lows indefinitely, which wouldn't make a lot of sense to me. I even asked Grok for a range. So Grok said approximately 80 to 250%, 1.8 times to 3.5 times the current cycle low, and gave its explanation for why this fits. So let's pretend our robot friend might be onto something. And what I'm going to do here is just kind of zoom in on these three lines that I have right here. So let's do this. Nope, that's a shitty zoom in. Let's try that again. I want you to get out of here and I want to go like this, and we'll do it again. Okay, so this line here represents the amount of time that we might have left if we were to run into October and things just kind of blindly and stupidly go 365 days, right? If we were to assume, based on our evidence, that we hit our low and our little wick below the 200-week moving average during our early June dump, we have a few different scenarios here. So this bar, let me get rid of this guy. So this bar represents Grok's prediction, 130%, taking us just past $130,000, $136,000, $137,000. Grok's low prediction, which is around 107, and then finally Grok's high prediction, a little bit north of 200. Again, maybe except for the 251, even from here, these levels wouldn't really make sense. So we have to ask ourselves, something's going to break here. Are we going to keep going down with lower highs and lower lows indefinitely, and the people who are saying, oh, hey, Bitcoin's a piece of shit, crypto's a piece of shit, it's going to zero, are they correct, or is something going to break? And I think in all likelihood, it's probably going to be the diminishing returns. Food for thought. Let's go ahead, and I want to talk about why people are coming up with these lower targets despite the evidence that we currently have that Bitcoin is either near or at its lows at this point. And I think a lot of these thoughts come from channels that utilize a lot of Elliott wave analysis. So I have two channels here that I'm just going to quickly look at and react to. it is not to dunk on these channels and say that, oh, they got this wrong, so they're bad. No, people get things wrong all the time. I get things wrong all the time. If I got things right all the time, I would be stupid, filthy rich, and I'd be living on an island and not making YouTube videos, and neither would these guys, right? But I want to just play a few clips from this. First one's from the Doctor of Pump and Dump. I want to show you what he believes based on his analysis that is going to happen to Bitcoin now. And then I'm going to play another video where he made a call of what was going to happen to Bitcoin at the top of the bull run. And that video was in August of 2025, this past year. So again, this is not to say that these channels are bad. In fact, they get a lot of things right. And I think it's given me a different perspective on the market, and I've really appreciated their content. You should go check these guys out. But nonetheless, check out the way that they were wrong here. And I think it's really going to stand out to you guys. So let's take a look.
Over here, so he told us this was the reversal at back at the top, and this followed 36%, 39%, and now so far.
This is one of his most recent videos, put out a day ago, by the way.
What is it, 29% or so. And I warned you that big drop was coming. Again, I warned you that we were rolling over again, pretty parameter here, very similar to what we had at the last bear market. After the bear market rallied to 200, continue to point out 52% drop, rallied to 200, 52% drop. This is how I predicted the crash. Because this is what
so we see here, he's calling for a drop to around 25,000. And this video can look quite convincing. It's done it before. It's respecting resistance and support levels. We can see here that we have a rising wedge that we're breaking down off of. And as convincing that this looks, analysis like this can be very wrong as well. So I'm going to give you an example of where, that's a different channel we're going to go to in a minute, where despite the lines and despite the resistance and support levels and all the indicators that he uses, he was quite wrong to the upside. So let's go ahead and take a look. This is from 10 months ago, a little bit before Bitcoin's peak in October.
wave 3 of primary wave 3. So I think that you're going to have a significant move higher, but likely going to back test this level. So again, I continue to believe Bitcoin's likely headed to 171,500 or Fibonacci extension, 174,700 here, I believe it is. Again, another Fibonacci extension. I talked about all this in my last update. See the charts for yourself. I'm not going to show you in this video. I do show those charts on a regular basis in my videos, but all near that 175,000 area.
I'm going to fast forward a little bit here.
October, November, whatever, December. That's where I think Bitcoin's going to top. Whether we reach it, go parabolic immediately, reach it sooner rather than later. We're at lower levels, closer towards 150, 160, 65,000, or whether we take our time reaching it, we go to higher levels, which could be above 175,000, 180, 185, 190,000. I think we're moving towards the 200,000 level. And again, my target is 175,000, but we very well.
So there we go, right? So again, I'm not calling out this channel. As a matter of fact, he's a great analyst. I'd go ahead and check him out. But one of the problems that I have with not only the Elliotticians, but with people who are in crypto in general and are leaving comments and giving their feedback is the premise that people tend to be too bullish near tops and too bearish near bottoms. And we have all of these not only macro indicators, but on-chain indicators. I mean, guys, look at this. I mean, Bitcoin support price is only $4,000 beneath us at this point. We have all these on-chain indicators that are telling us we are near the bottom, but we draw a lot of fancy lines and we think we're going much lower at the bottom. We think we are going much higher at the top. This guy, his name is More Crypto Online. I think he's great as well. And if you want to go ahead and watch his videos, you can. But you can see from his depiction here, he envisions Bitcoin going a lot lower than this, around this 35 35-ish, 36-ish level. And then earlier on, now he did question Major Top, which is a fantastic call. Again, I have to stress this enough. I'm just not calling people out just to say, oh, haha, you were wrong, right? But I mean, we have like indicators here on this chart, like telling us that, oh, hey, it can move significantly higher as well. So we want to try to avoid that. And then he made his own power law, which the bottom's never been tested ever once. So I don't know, check it out, see what you have to think about it. But my point is, we have, while the 4-year cycle, at least for now, seems to be playing out, it doesn't have to forever. And we might not even find a new low here. We have on-chain indicators telling us that we might not. And to those people who think we're going much lower, are we going to both go lower and have diminishing returns? Which one is it? Which thing is going to break? Okay. And another thing that I'd like to point out too is that while Bitcoin, at least for the time being, is looking like it wants to continue on this 4-year cycle, that doesn't mean that altcoins have to. And I want to bring up some examples here. So I'm going to bring up a few stocks where they have been flat for years on end and then ended up going up. Because as we can see with Ethereum and many altcoins, they haven't done anything. This has been 4+ years of sideways. Okay. So let's take a look at a few examples. So this is Melrose Industries, and let's go from August of 2011 to October of 2015 for 4 years. It basically did nothing at all. It just ranged between $60 and $120. Very similar looking to Ethereum, only to then finally, and when it's been at the bottom of what seemed like a prolonged contraction, only for it to explode up afterwards. Could this be a very realistic possible outcome for Ethereum? Absolutely. Let's go to Tesla. This is a great comparison because not only do these charts overlap time-wise, it has a lot of similar price action behavior. So it's been mirroring Ethereum in many different ways. So Tesla, from its peak in 2021, which corresponded with Ethereum's, had been going sideways and hasn't done anything for years. And then at its worst point, at its low, when many people are thinking it's probably over, shot up, and then it's recently set new all-time highs. Perhaps it's the case that Ethereum, which kind of set a new local low in here, kind of similar to this area, could be very much next, right? And Tesla is probably going to continue to go much higher than it is now. Could also be the case for Ethereum. Let's go ahead and take a look at another one. So this is Auto Trader. So during this period of, December of 2015 all the way to October of 2018, did absolutely nothing and then exploded up, similar to Ethereum. Nowadays this guy's kind of struggling a little bit, right? But that doesn't mean that it's over. It might be just trying to hold some support at these levels and then try to round out. This kind of looks like a rounded bottom here and then maybe push up, right? We can also sort of see this in the others chart. So what I have right here is others with some time bars on here and then overlaid with Bitcoin. So the others cycle looks a lot different than Bitcoin. So from its peak in 2021 to the point where it started, not the absolute low, but the point where it started to reverse, it was 546 days. And then once again, from the high point in 2024 to our low point now, 546, 547 days, possibly the point where we begin to reverse. I kind of thought this was pretty neato. If we actually look at the bottom of the bear market or near the bottom of the bear market in 2023, for a few months here as altcoins were beginning to push up, Bitcoin was actually going down for 2 months straight, and altcoins kept making strides against Bitcoin and then massively outperformed Bitcoin as Bitcoin started to rocket up. Could it be the case here that maybe Bitcoin struggles a little bit? And look at this, Bitcoin's going down. Altcoins are remaining relatively flat. Once again, could this be the case where perhaps even Bitcoin drops a little bit more, but altcoins lead the bull trend once again? Something to consider, especially when you look at individual altcoins. This is our prior bear market. Down 94.5%. This is VeChain. Does this look like bear market complete to you? I think it does. I'm not telling you to go buy VeChain, but this was our bear market. And also our 547 days again, which is kind of interesting. Our 18 bars exactly. Near protocol, right? Last time, 94.46%, 608 days. This time, 89% to our bottom. Again, that's a bear market. That is not the beginning stages of a bear market. This is the end. This is the bottom. This is we're leveling out and turning up. Cardano. This one's been brutalized, but again, 91% down last time, 88% down this time. Does this mean Cardano is dead and is never coming back? I sure don't think so. Again, not saying to buy Cardano, but this is just to illustrate the fact that the bear market already happened. It's not starting. All right, so guys, that's pretty much it for today. I do have a chart request, but before I say that, I hope you found all this interesting. Hit the like and subscribe, leave some comments, and leave a chart request if you want one too. So for today, in first request ever, I got Toshi for our chart request. And in order to analyze Toshi, I'm just going to go over my rules that I picked during my video, how I pick altcoins to increase odds of success. So if you haven't seen that one yet, check it out. Pretty good presentation. And let's get into some of these rules. So we're going to go one by one and see if Toshi satisfies these rules. So my first one is the crypto has been around for at least 2 years and ideally since 2021. The reason why I do this is twofold. So first of all, if it's been around for at least a period of 2 years, it's probably less likely to be a rug. And then secondarily, we can see more historical price action on the coin, so we can use the past better to judge our future decisions. So Toshi has been around since 2023. It's 2026 now. All right, we pass. Awesome. Let's go with number 2. It's a medium cap altcoin, generally speaking. We're ranked. We have a $50 million market cap. Yep, that's cool. The coin is volatile to both the upside and the downside, providing excellent buy opportunities and potential take profit areas. So let's take a look once again at Toshi. So we dipped quite a bit during the tariff drama, and then we made after that. Hold on, let's go to TradingView. And then we dipped after that, and from the low made a 400% gain. Right, that's very nice. It performed well when altcoins in March of 24 were performing well. It did very well, so it's all-time high in January of 2025. So those are some really good signs that I like to see. So we definitely have enough volatility to work with. All right, let's go to our next one. The coin has been showing recent relative strength, but it's still cheap. So let's look at some ways that Toshi might be showing some relative strength. So I'm going to go back to this line, and then we're going to go to our log scaling. So one of the comments that I made is if the coin is up and to the right on log scaling, that could be a sign that there is some strength there and that there's interest and that the coin's not going to fall to zero or anything like that. Could it still? Absolutely, this is crypto, but we're trying to just like piece little evidences together like a lawyer that tell us, oh, hey, probabilistically this is a good investment. So since its inception, yeah, it is sort of up and to the right. It's been bleeding a little bit compared, not to altcoins in general, but it's just been bleeding a little bit in general. But what hasn't? So I would say up and to the right on log scaling shows some level of strength. What are some other ways that we're showing strength? So we're actually holding support from lows in October of 24. And it looks like we're trying to round out here and carve out a bottom. Let's see if we can just move it a little bit. And we're also higher than its first few months of inception. So right here, this looks pretty good to me in terms of showing strength. Yeah, that looks good. Let's see here. Oh, and it's cheap. And it's cheap, right? I mean, we are, how much are we down from the all-time high? We're down. And this isn't perfect. It's just rough, 95%, right? So we're showing some sort of strength here, and we're relatively cheap. What I would really like to see, though, is maybe give me a green candle or two. Give me some confirmation that we're starting to pick interest back up. But overall, I think in combination with the fact that you're holding these levels, you've shown good recent strength in altcoin upward moves, and you're up and to the right on log scaling. I would say in terms of showing strength, you're looking pretty good. Let's look at some other ones. Most of the circulating supply of the coin has been unlocked, or token locks are done slowly and sensibly. So all of our 420.69 billion Toshi have been unlocked, right? So that's not an issue whatsoever. I do think that's a good appeal of meme coins, is that they rarely, I mean, some of them do, but they rarely have inflation to them, and they come out with a fixed supply. So I think that's a good sign for Toshi. And then finally, trending narratives. Memes obviously aren't trending at the moment. However, this can easily come back, especially when we get into some sort of altcoin euphoria, which I think if we're just patient enough, it's bound to be coming soon. So overall, our commenter said that Toshi was looking juicy, and I agree. I think the only thing I'd really like to see here is a green candle. But if this is something that you have conviction in, I think if you look at this chart, its price history, even just from eyeballing it, what's the most likely play for it to just dump down here? I mean, it could. It's crypto, right? But I think your most likely play is that we carve out this bottom and then we start shooting up again, as it has been in the past. So if you like Toshi, DCA in. Again, not financial advice, but I think it's good. In fact, I actually bought a little bit of this today. So yeah, with that being said, that's it. That's all for me. And hope everyone has a great day, and I'll see you in the next one. Peace out.